Hello and welcome to the latest Accountancy Age Big Question. The consultancy industry has enjoyed boom times in recent years, but is it all about to go pear-shaped? To answer that question and more, we have Philip Abbott joining us. Philip, thanks for coming in today.
Thank you.
You've authored the latest Accountancy Age survey of the consulting firms, and you've got some interesting stats for us. Could you run through some of the top numbers?
Well, yes, the fee income growth last year was far higher than they expected. It went from around 6 billion, the top consulting firms, to 7 billion, up £1 billion. And
that was the survey of the top 75 firms?
That's the top 75, just those firms. So huge amount of growth and far greater than was expected.
If it was greater than expected, what has driven this, do you think, Philip?
Well, mostly I think it's been gains from financial services. There's a certain amount of gain from public sector, which goes up pretty well every year by about 10%.
Yeah.
And also communications industry, because those are the three biggest industries and biggest contributors to fee income.
Sure. I mean, you mentioned financial services, which obviously is a massive market for the consulting industry. You know, we're right in the midst of a banking crisis, and we have an economic downturn.
Mm-hmm.
What has happened in the obviously we haven't had a banking crisis of this magnitude ever before.
Right.
But in terms of economic downturn, what kind of effect do you think this is all going to have on the industry, and based on surveys we've undertaken in the past?
Well, what's happened in the past has been quite interesting. Where you have an economic downturn, financial sector tends to turn off first, and the other industries follow pretty rapidly after that. So I think what we're looking at here is just that scenario of financial services cutting spending on external resources, which is consultancy and everything else put together.
And 1992, there was obviously a massive cutback in financial services.
92, 2002, we've had these cuts before where they just turn off, and I think last time, 2002, 2003, it was 27, 28% down from one year to the next. Now, they turn it off very quickly. That could conceivably happen and more this time.
Okay, fair. I mean, we've spoken to the Management Consultancy Association,
right.
Deloitte we've chatted to as well about this, and they've admitted that there are challenging times ahead for the industry, but with the caveat that they've been through this before and they expect to be able to ride through it and help businesses turn themselves around and provide consultancy services that way. Can the industry offset the financial services crisis?
Well, I suppose to a certain extent you can, but if we're looking at a drop of, say, 30% from financial services spending on consultancy, again, you're going to see a huge amount of fee income coming off the books. Those three major markets, financial services, public sector and communications, are over half. They contribute over half of total fee income. Financial services, if it dropped by 30%, say, which I would have thought is conservative this time round, it could be a lot more, that's about 700 million off fee income. And that would mean that they're going to drop from contributing 2 billion a year in fees to 1.4 billion.
Now, obviously, Philip, that is a guesstimate, but it is based on historical data. I mean, in 92, which we referenced just a second ago, I mean, the consultancy industry lost £500 million off its revenues. That's right, isn't it?
Well, I think that was more. 92 was one of the early declines. 2002, 2003 was a major one. The economy had already gone into decline, and 9/11 accelerated that. So we saw the huge cuts we've seen it 3 times in the years we've done this survey. The huge cuts are not really sustainable for consultants. Some firms will be able to adapt. Others are going to find they're getting their fingers burnt because the fee income just isn't going to be there.
Sure. Well, Philip, I mean, that's a sobering thought, and thank you for joining us today. Thank you for watching, and join us again next week for more insight from the Accountancy Age Big Question.